All right. Let me know if you guys can hear me. You should be able to. I had to unplug things yesterday for the stream, and they're all back right now. I was getting the girl some yummy juice, as she calls it. Sounds good. Thank you, Nora. Appreciate it. Yeah, I got like a 2.5, 3 second delay today. It's not bad. Not too bad at all. All right, so action-packed morning today. I will say currencies are more or less flat again. It's been a lot of shot back and forth, but that's what we can expect. Today's not a normal FOMC day. It's the economic projections day. So, we'll see what happens later on today. I don't think they were happy about the retail sales number, but we obviously know that retail sales next time will be great. You know, having the crazy weather that we had, as well as people using up their $600 stimulus checks from January. Obviously, was able to increase that, right? But we shall see. Crude oil today should be interesting. James posted the API is supposed to be a bit of a 1 million barrel draw today. I think that'll take a lot of people by surprise, as big as we were the last 2 weeks. CPI for CAD was down just a little bit, not too much, right? Again, I think that was a little bit of a. I think the 0.7 was a little bit too overzealous. I didn't expect it to be 0.7. I figured it was going to miss. I figured it'd be a 0.6, not a 0.5. So, not too surprising. Later on tonight, we have GDP for quarter over quarter, which is actually a good reading because that kind of puts us back into a higher COVID period, right, with December and everything. Obviously you're not trading this at Nadex, but look at those New Zealand yen and New Zealand dollar based pairs. I think both of those could provide some opportunity at 5:45 tonight. And then 8:30 tonight, unemployment change and unemployment rate for the Aussie. So it's definitely an Aussie night. Unfortunately, I won't be able to trade this one when I start up my men's league lacrosse games tonight, and it's like about a half hour away. So we play at 9:15. So unfortunately, I will be in the car during that time, so I won't be able to trade it tonight. But hopefully, you guys can make some money from it. It's a little bit early to start looking at levels, but we'll see what we got. There's been a little bit of chop back and forth, but between FOMC, that should help us establish the new levels. And then if it is a big push, there could be a retracement back aimed at that 8:30 kind of employment change, unemployment rate number at 8:30. So, and then obviously Ken speaks after that. So, some decent news later on today. As I said, we don't always get New Zealand, but GDP is a big one, and followed by Aussie. So I like kind of the back-to-back 5:45 and then 8:30 p.m. But like I said, I think things will kind of flatten for the most part, and it's kind of all over the place, right? We got some dollar strength here, but it's really just European weakness because you're seeing a little pound strength, little pound strength, little pound strength, right? You're seeing, little dollar strength, little dollar strength, little dollar strength, little dollar strength. So dollar strength going into FOMC, I don't know. I mean, I feel like if it was a strong retail sales, there'd be a bit more reason to be long, but I don't know. They're a little bit off today, but each of these is going to be more of a near-term type situation. Why is the stream button not working? There we go. Greece tries first 30-year debt sale since 2008. We'll see how that works out. Italy and France to restart AstraZeneca vaccinations, so that's good. AstraZeneca is underproduced and underdelivered. All right, so everybody's pissed at them. Let's see. COVID jab. Biden says Putin will pay a price for election. Yeah, okay, Biden. I hate this. Oh, he's going to pay the price for election interference. Great. So should the rest of the world do the same thing to us for interfering with their elections? Because we absolutely do it. I don't know. It's so funny. Like, let's all come together. Let's talk about peace, but yet let's just do nothing but piss off our biggest, like, I don't know. Why do we need to get pissed off at them? Why don't we work with them? I thought that was the way, Biden. I thought that was the way. Or is it not? Let's see. Electric is winners. No, there's really not much in here. Dixie decision, yeah. Experts. Experts, okay. J&J COVID jab for countries with variants. Yeah. Germany reports. It's just a new one. Oh no, it's just a report. I was like, plus 13,000. So nothing really. Like I said, FOMC days are not my most favorite days. I don't know. I think he could have done it. I think this is a mistake. Like, can we just move past it? Like, I don't know. Democrats are all about peace and working together, but yet let's make them pay. It's like, Okay, what are you really going to do? Right? Like, what are you going to send military weapons? No. Like, just stop. You know, it'd be better to like figure out how you could work together. And it's funny because you know what? Russia and China are doing that space station together. They're going to put actually not space station. I guess it's a Mars base station, and we're going to get left behind because Biden is worried about everybody working together here, but he's going to go after Russia for interfering. Like people live in glass houses should not throw stones. All right. So yeah. But we're at home. We're supposed to forgive and forget. Sure. So, all right, let's go over to the charts because we got nothing else here on the news-based side here, and you guys don't want to hear me go on a crazy rant for the next hour because I will. I will. You guys know how. Yeah. I don't. It's honestly we need at least a third party, but because two parties are voting and they control the rules, we'll never get a third party, or not for a long time. I feel like we should get many parties. I feel like the only way they could come out with I feel like the way that they could do it is if obviously because here's the thing, right? There are not just two different groups in the United States, right? It's kind of like the same thing with equality and everything like that, right? There are many different races that make up the United States, but yet we have two parties, and there are more than just again, it's kind of like, well, these guys kind of help me, these kind of people don't. Like, I feel like, if we want to have, extreme right, extreme left, sure, there's a place for that. Some people like those things, but there should be moderate ones, or there should be one in the middle. There should be at least 4 or 5. I think 5 would be great. I think they should put caps. Like, I think that the best way to do it would be to put caps. Like, if they want to go to a popular vote, fine. Go to a popular vote, right? If you want to do that, right? Although that kind of strips state power, which I don't agree with. I believe states should have more, but if you're going to do that, then put a cap on how many seats that an individual party can hold, so it requires them to work with other parties and kind of form those coalition governments. So it's just not two choices. So they're required to work. And again, you could have 2 or 3 conservative sides. I'm cool with that. Or 2 or 3 liberal sides. Sure, that's fine. I mean, if that's where the population is moving to, great. Right? But there's got to be a way to represent it that way. Maybe make the House of Representatives, but you basically have to have a minimum. Like, you can only vote for one, so you have to figure out which party most aligns with you, right? It is completely, Sean. It's absolutely all a lie. Yep, all of it's an absolute lie. The fact that we're still worried about Russia interfering in election, right? How many times ago, right? How long ago? We are still worried about that, but yet we're not going to talk about the promises of $2,000 checks that was a blatant lie that turned into $1,600 or $1,400 checks, right? People won the election by that lie, and it was an absolute lie, right? Whether coming from the top or from the local people, it was an absolute lie. They won the election in Georgia based off that premise that it was going to be a $2,000 check, which turned into a $1,400 check. Right? I don't think you could have any more clear bait and switch fraud than that. Right? I mean, that's like saying, here, I'll give you this Ferrari, and then you get a Ford. Hey, it still begins with an F. I mean, they're giving you something, right? It was a bait and switch. They purchased the election on a lie. But yet we're not talking about that. We're worried about Russia from, what, 4 years ago? 5 years ago? Yeah. So, yep. Yeah. And again, Ernest, the truth is objective, right? The truth only comes from the data that you look at, right? Because one person's truth is somebody else's lie. And when a party is who determines whether it's a truth or a lie, that's where it's wrong, right? I mean, I think the global warming debate or the climate change or whatever was a great example of that one, right? Oh, it's coming, things are melting and this and this and this. But then when they looked at the NOLA satellite data from the buoys, it didn't support that theory. And it's like, no, you need to you need to do science. Well, we did do science. We looked at the weather. We looked at the weather patterns / temperatures of the buoys that are all over the world, and it didn't support that hypothesis. And then magically, no, it's fake news. What? Yeah, it's crazy. All right, so Aussie for tonight. All right. So Aussie's been bouncing back and forth on a level. It's been grinding in there. It's tested this level at 77.17 for a bunch now. We are still inside of this 4 hour, and actually it's more of kind of a daily, but we are still smack. I mean, we're literally right smack in the middle of this thing right now. So it's not really set up ideal in either direction. Dropping it down to a 30-minute. Let's readjust. Boom. You can see that we did just go off a zone a little while ago. And again, it kind of drove a little bit deeper in, but it pushed it to the brink. It was a level that we've been talking about for a while. Actually, I'll go to an hour. And you can see we had this one set from this level here. We touched it here, went back. It touched it again, went back all the way up to its profit target, came back down again and touched it. So it's a level that's been hit a few different times. For this to break through, it would need dollar strength. Right. And we've seen a little bit of dollar strength in there. It's kind of rallying back right now. I don't know that I'm really comfortable taking it again because, again, we've tested here, we've tested here, we've tested and it's gone a little bit lower, just a tad lower than this one. And really right below where this wick was, we don't really have a whole lot. So, I mean, we know there's buyers in here, but at this point we have 3 touches. I'm afraid touch number 4 is going to be the one that finally breaks through and pushes us back down. And again, there are 2 factors involved here, right? FOMC, right? Mentioning anything about raising interest rates will bring dollar strength. And again, that will help us drive us down. And any type of negative data for tonight. Oh, crap. It's not on the charts. I was getting ready to switch back and I was like, oh, you know what? I never switched it there. They would be able to see that one. Yeah, I was going back to Australia and I was like, yeah, Australia's data is expected to be good. So if it comes up bad, and then I was like, oh, wait, I never switched it. They can see that one already. And then Ernest starts, blitzing us with stuff. I don't see them giving up. Well, and Neuro, you're right. They won't give it up, but they're the ones that make the rules that admit more parties in. But both parties are so fundamentally flawed at this point. I mean, it's ridiculous, right? Yeah, it's just they're complete. They're both flawed. There's the whole it's completely flawed. Yeah. I'm catching up on my comments. So yeah, I would expect a fail in this one. It's not really a Harry Potter candidate. We have a small little level here, as well as it's just not enough room from where the risk level would be. So I would say the next probable bounce area is probably the 76.83. And again, if we can grind our way down there through the day, that's obviously a probable short. If we pop up again, you can see this little tiny zone here. It's only about 3.5, 4 pips, so it's not really the ideal situation. Actually, let me see something. Do I have the right one on here? I do. That should disappear. Oh, it didn't yet. But anyway, this one will disappear. I wouldn't mess with this little one. I'd wait for the one a little bit above. Kind of use an intraday curve level of probably this. Again, typically we do it on a 30-minute, and yeah, I'd probably shrink this down to. I don't like how that pushed all the way to the top of that one. I may look at this zone here. I may look at that instead. Push this up. Like I said, I won't be able to trade this one, but this is quite a large zone, and you can see that this is where the original kind of test was, and it pushed it to the brink. So I don't know that's going to hold much longer, but we do have a wick over wick and a little piece up here. So I would say probably look at these would be the 2 levels I'd look at for tonight: 77.82 or look at this 77.75 level. Either of those 2, and again, this is quite a rally. I mean, that's about 50 pips. It can, FOMC can absolutely, without a doubt, drop this thing 57 pips, right? Well within its range of moving. So yeah, if we get an FOMC burst up, those could be 2 potential levels for a short tonight for the Australian news. Aussie yen, you guys can see, for Monday, it did end up hitting that level, kind of rallied down. It hasn't quite. It got front run here, kind of front run again. I think it's actually hasn't touched yet. It got front run a 3rd time, but I do see it failing. You guys can see that the yellow area, 83.82, is really kind of where I'd first be looking for potential buys. But again, that's a profit target for any of these shorts. It is up in the 3rd still, so we are more bearish this position, looking for this to come back down. Giving away free gas. I'm okay with free gas, James. I just saw it pop up. James, I like free gas. Hey, just think about it now. All these people complaining about gas, right? How many months ago was it that they couldn't give gas away, right? It was like going for zero. It was like, please, someone take this. It was zero, right? I mean, God forbid if you could have accepted delivery of that, right? Stock up the fuel tanks outside, guys. We'll have free gas for a year, right? But no, that's all gone. No free gas for you. Now it's super expensive and only going to get worse. It's only going to get worse. That's the thing is we're complaining about it now. It's only going to get worse, right? When you have a president that literally talks about how oil is bad, we don't need pipelines, we don't whatever, all he's doing is feeding the people that he doesn't like because we are not going to stop using gas. So, yeah. Anyway, look at this come down 83.82 is where I'd be looking for bounces on this one tonight. Now, Euro Yen actually took a really crazy move. I mean, this was a nice one. 91 pips on this one. This came in where? Right on, yesterday. Yesterday morning, this one kind of dropped. And as you can see, we had a 4-hour level sitting right there. Now, what sucks about this one is it missed the 4-hour zone by 1.2 pips. Okay? 1.2. Depending on your broker, you may have got an entry into this one. We had talked about it before, about this 130.39. And again, that would have been, I don't think, let me see, did it show it on this one? Yeah. It was probably the spread that cost you. It was probably the spread. It was so close. It was so close. Hopefully some of you guys got into this one. But again, decent drop to the downside. We've pulled right back up into it. So, where we are now, I would say that, again, that same level up top is probably what one we want to watch out for. This will have some exposure to FOMC. Again, having the yen involved with it, we will have a little bit. I would say still, I mean, the 130.39, I think it's probably the better one. But again, we're going to have to be cautious. This 130.30, basically, it's 10 pips lower, but 130.29, definitely a possible area for FOMC. I don't know. I mean, right now we're still in the parabolic retracement part of this one, and you can see it came down here. I mean, literally, you would have drawn this one right there. There was the pop, right? And again, we hit, and now the parabolic retracement. It's pretty decent, right? I mean, 50 pips retraced. I would expect this one to go back up and test that level. For this position, if we are kind of sitting right here before FOMC and you guys are still long, I would absolutely get out, okay? If you have a bunch of profit in this one, this is not one to mess with because it will have some movement from FOMC, or it should, the economic projections, because it's going to be on, again, more of a worldly level. So just be cautious of this one. I just think that there is a little bit extra risk. Don't take it if you're long, and you should be, right? From this parabolic move, you should be long, and it's just continuing to grind higher. So but watch out for 30.29, 30.39. Either of those two levels I think is decent for a short. I think we will probably get a bit of a rollover too on this one with FOMC. Now, pound yen. Oops, let me adjust this. Boom, there we go. All right, so pound yen, we had a short up there, and again, we continued. We drove down. It got past its 1 to 3, went down to its 1 to 5, almost got all the way down. What is Will posting? Oh, Will, that sucks. Yeah. Obviously rallied back up again. There was a short here, and it was a 4-hour base level short. You guys can see it right here. It touched. It wasn't, again, it's the same one we've had drawn for this week. From the 4-hour, it rallied down about 45. It didn't quite make it back to its 1 to 3, but in looking at this candle here, you had to be looking at this one and saying, "Hey, wait a second, there was a nice little pop right there, right? I should probably have my profit target in that level." And you could have, reduced this short down to the new level there. And again, if you did it too much, you would not have gotten entry, but it did hit the 4-hour level, so you did expect a drop on this one. With it pushing down right now, I would say it's kind of the same situation. If we can get up into this 152 level, right? If we can get up into this range, the 152.05, before FOMC, it stands to have the same type of movement. Ouch, Will. 2 and 10 minutes? Oh, that sucks. That sucks. Yeah, Will's having a rough morning, everybody. Yeah, that oil one, Will, was kind of like, when I was looking at it. Same scenario, guys, as the euro yen, right? Yen exposure. Overall market movement, FOMC. So again, I'd be looking for shorts as well. And again, like I said, it's been an interesting area, especially on the 4 hour, because we've punched down, we've had this problem here, and it dropped down again, and then was front run. So we know we definitely got some sellers up in that range. Don't mess with it. Will's like, I'm done. This day's not going well. I mean, Will, it's not going well, but it's not going bad, right? I mean, it's not like that was your stop loss that was like 1 point beyond, or like one penny beyond. You just didn't get entry, so it's not necessarily a bad day. It's just not a day that's been good yet, right? Right? You got to be a little positive, right? Ernest is trying to console you right now, and it's just not. I feel like it's not working. All right, pound dollar. Okay. Right. So on the 4 hour basis, you can see we're still on the bottom side. We had talked about it the other day. We took a nice little bounce off of it, a push back up. It ran into sellers, right? It didn't quite get as far. There was a level just above, and again, coming from this lower third into the middle range, it missed it by just a little bit. I would say right now, and again, the way that everything is set up, the way that they're talking, not that retail sales helps this, but I feel like everything we've heard, I feel like the dollar is going to gain some strength. And again, I could be completely wrong, but I just feel like the market keeps preparing for it, right? Like in this case, I mean, we're popping up. We're in a level basing right now. There's this big kind of, looking at this, I mean, this is a big kind of drop right back down again, pushing it down to here. And again, what we would need for dollar strength is them really mentioning like when they're going to raise interest rates, maybe sooner than expected. Keeping control of inflation so it doesn't run out. I mean, like anything that is even hawkish at all should provide dollar strength back into the market. So I just feel like, this one is kind of setting up. I hate, I don't really like going short in this bottom third, but the way that it's setting up, I mean, it looks like that's what it's really trying to do today. And again, you can see it here even better. And again, maybe this is the level. Maybe we use this for a Harry Potter short, although there's going to be a little bit of a hiccup. But I really think, downward side targets today are in this, the 138.26 range. You can see that we have, this top in here, right? Lower, lower, lower. I mean, we definitely have sellers. And again, it's going off of a level. I mean, we have an hour level right above where this is. So I feel like there's a lot stacked to the top side. Now, will 15 and 30-minute levels hold FOMC projections? No, they shouldn't, right? They shouldn't. But the way that this keeps spiking higher and we keep establishing new levels of sellers, I just feel like this thing wants to keep bursting through, And again, the buyers have been pretty rock solid, but they're not going to last forever. I mean, this level's been kind of, probed and pushed multiple times here. So yeah, I just feel like it feels like it's setting up for more of a short pushing back down. And again, don't like short in the bottom third, but it is coming out of a level here that we just missed to the downside. So, who knows? Maybe in the next hour or two, we get a reversal. It is 10 o'clock. We may start getting a reversal higher. But, if we can get up into this range here at 139.35 before FOMC, again, that could be a potential area where we take shorts. I don't think we'll drop all the way down. I mean, that'd be 75 pips before FOMC. That's a bit too far. So I don't think we're going to get that far. But right now, I have to say I'm a bit more bearish, the pound dollar. Euro pound. All right. So Euro pound, again, this was set up originally on the 4 hour. We're still flirting with the same area, right? We did have a push away and it literally came right back down again. And again, it was a very short-lived rally. And it ran into some levels over here. Look at this. Right back up, right down. And this time it actually did breach and pulled right back. So now we know the buyers here are gone. The buyers here are gone. The buyers here are gone. So this area is finally clean. So I would expect the next hit to be the one that we actually get the Harry Potter off of. So, we're still there. We're still waiting. I don't think on the 30-minute. Now, on the 30-minute, there's kind of a base, but it didn't clear. We're not through yet. So 30-minute, again, look for the Harry Potter through. Again, I think the next one through it could be the one that kind of finally gets us. All right, finally gives us our drop down. All right, so still waiting for that. All right, and I think we're lined up. I think the EU will have some problems this week. Yeah, exactly. I just said that. Well, yeah. Euro dollar. So it's funny. Yesterday I marked this off for Todd. I was like, yeah, this is going to be the intraday range, pretty much. I don't see it leaving this range, right? This white box. and we're still kind of stuck in that same area. We had this previous area, and you can see we got entry on it. It came back up, touched it again, went all the way down, came up, came all the way back down again, came up, and we're pushing back down. I'd say same thing. I don't expect that level to hold. It is an hourly level. It's about 30 pips below. I think, I would not be looking to take another short off this zone. I think at this point we've hit this zone enough. We got to take this zone out. Like I said, it's already hit profit target twice. I would say that's about 40. Let me see, where are the 4 hours on here? Man, the 4 hours are way up there. All right, so this is a 4 hour level. All right. So here's a potential level for holding an FOMC spike. Right? It is about 72 away. So that is a valid FOMC spike down and reverse a point higher. Man, I can't believe it's all the way up there. 129. 7 pips. 8 pips. 8 pips. I think for FOMC spikes, like reversals, I'd be looking at this. It's where my reversal levels would be. So just a yellow. And here's why. So this is very tiny. And again, is it the original test? Nah. For if it's anything else but FOMC, then yeah, I'd say it'd probably be okay. But again, it's a test of a level. So it's already been pushed and it's gone up and pushed to the top. Decent drop to the downside, but FOMC can blow through an 8-pip stop loss. This has already been pushed, and again, this was kind of we were looking for like a slow grind against this level. Again, not on an FOMC-based level. Up top here, it did kind of push, and it was a decent drop. It's still in the third, but it's a very small. I mean, we're talking about 8 pips. I'm just afraid the chop on that one will kind of really get eaten up. And again, it's kind of bouncing off a level over here, but this level being a little farther away, being 129 or 139, it's going to be able to stand up a little bit more. It's a little bit bigger of a zone. You're talking about having about 13, 14 pips in there. So about 1.5 times the size of these little 3 here. It did have a big jump. So if it breaks through, I don't see it having an issue getting up to there. But in that final push forward, again, it's starting to get a little bit far for kind of an FOMC meeting note. Again, it would be extreme dollar weakness, a pop up, and a roll back down. The more likely scenario is going to be the 75 pip run down to the bottom. Now, FOMC can move 150, 200. It's not, typically an interest rate will move about 100, about 130 to 150. They're not raising interest rates, but it's the question of when. And like I said, this is kind of an extreme move, even for an FOMC move, right? So I think that's a bit safer at 120.40. I do like the one, again, this is an hourly and a 4-hour overlap. So it's definitely an area that I am into, as well as the 1806. So either of these two levels lower, a spike into them, look for kind of a little bit of a bounce, and then we can take hires back into this middle third. So I think, we can either go from here up or for here down is I think where we pull back to. Okay. Dollar CAD. Dollar CAD, we're still kind of floating around here. Again, you can see that it took a bounce off the 4-hour level, right? I'm sorry, it's a weekly level on here. I don't know why the heck it clicked that high. Right. We don't have anything clean. We have a daily level down here at 123.10. It's a bit too far. I mean, it's about 167 pips. That's quite a big move. I would say for the Canadian data later in the week, I think this one is better. But right now, I'm not really in love with too many of the levels. I guess this. Let's see. That's about 15. That's not going to hold. This is about 70. The 125.50 on a spike up. If we can get a spike to this level, that could be an FOMC rollover as well. And again, be cautious of this one. Make sure we get kind of a basing and then kind of a failure to go higher, right? We kind of want to see something along these lines. It's not as high, right? Somewhere in that zone. And again, you could use the upper section here as well. Any of these sections, either of these two areas with a proper balance where we have a failure to go higher would be a reversal signal for me, taking this back down into the 24.75-ish range, I think is probably decent. I don't think we'll make it all the way back down, but that would be also a dollar strength based move. Okay. Dollar weakness may move this. I think it's coming down to 123. Although that's pretty low for this one. I don't think CAD's in that bad of a situation. Okay. Dollar Swiss. So dollar Swiss, again, we're still channeling kind of stuck in this middle area. Again, we left this white box on as an area of interest. It came through, was the top, was the bottom, was the top, bottom, 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 going through, top, bottom, top, 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 boom, 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 a touch, and again, we're touching again. So right now, I would say we are more set up for a short, pushing to the downside. Poking, if Biden or if Putin starts kind of mouthing back, then yeah, maybe we'll get a little bit of Swiss strength in this one. Where we are in this, it's chopped through so much. We've really been stuck in this kind of sideways channel right now. On a 4-hour basis, you can kind of get a read that, yeah, we had a turn here. We got a little bit of a turn, but we're only about 23 pips away. This will move about 50 to 60 pips with FOMC if there's any type of surprise, and we're near that level. So kind of leery of it right now. Again, the only reason there's not a level here is because this did break through. I think downside, we're about 70, 80 pips from this 91 to 93. We could get, I guess, a potential bounce area from here, right? That could be a potential. Whoops, not that high. I don't want it that high, right? There. Wait, no, that's too much. Why was it not doing it? I hate when the snap feature is great sometimes, but for the most part, I'm just not a fan. So yeah, I think right now I'd probably be set up more on a technical level. I want to say more of a weakness type position here. And again, I don't think this zone holds with any type of FOMC push. I think it will start to kind of flatline a little bit. I'd say overall more bearish than anything else this position. I do think a bounce off of 91, 94 is probably a better position. The sound cut out. Maybe I just wasn't talking. Yeah, I don't know why we cut. Unless my daughter is in the other room downloading some type of, crazy videos on YouTube. She's been in there for 40 minutes by herself and hasn't, yelled at me. So she's either watching a movie or God knows what type of dark hole she's down on YouTube. Right? YouTube has mastered the black hole of things for kids. Oh, I'm going to make this cartoon over here on car insurance look like a child's cartoon so the kid clicks on it. Just so they can get the pay-per-click money. Yeah. So I would say this one I'm more probably down, more bearish biased. Like I said, we got some levels up here. We push up. You guys can see them here. There's an hourly level as well as a 4-hour level. But I don't think either of those two levels are going to hold for FOMC. And this one here is very, very tiny. It's like a 7-pip zone, and it turned kind of in the middle of nowhere. So I think play the bigger pairs. Euro yen. So Euro yen had a nice little kind of run yesterday. It hit yesterday morning and kind of rolled all the way down. It did create a new level, and this level was a little bit, it missed this by just a tiny, tiny bit. And again, this would have been your profit target. Not necessarily an entry, but a nice little profit. And it got there. It was a decent run. It was well past the 1 to 3. It was about 45 pips to the downside. We've come back up and we've hit it right now. It's a zone. Right, it's a zone. It's not a freshest of zones. It's been hit 1, 2. This is 3 times. So we are kind of approaching. And again, here I'll put it so you guys can see it because people are like, "What do you mean it's been hit that many times?" You got that one there, right? We got this touch here, and we got this touch right there. So, is it a zone that can hold? I'd be a bit cautious with it. It was originally formed, and you guys can see this is a big daily zone. So is there a rollover point in here? Yeah, there definitely is. We know we have a smaller kind of refined level at 106.67, 106.89 up top at that blue. You guys can see it at the green line. Let's see if I can get that closer. There we go. That one is about 50 pips away. So I would say that is probably a better short at this point. This zone, as I said, has been hit a few times. Could it roll and go down? Yeah. We're at hit number 3 and it's bounced. Like I said, the question is it a high quality level? And the answer is no. I would say that the level here, I just want to see if I can grab that. That is going to be probably the better level up top, particularly for FOMC. Oh, crap. I didn't want to move the top. I think it's right there. I think this is probably a better roll spot at this point. And again, being 50 pips, that's going to be a decent bump up with a reversal for FOMC. All right. I don't think we'll get there before. I think we'll need FOMC to help us. And again, that would be more of a dollar strength. And then when it comes in dollar strength, it's like, oh God, the overall indices are going to get crushed. That's where this is kind of a play back and forth. But again, I'd be very cautious with any type of shorts you put in now. And again, we only got 4 hours to go, so it's not like we're going to see a ton of movement. This one would have to move about 35 pips to the downside. Could it move? Sure, but right now the hourly ATR is only 8, so it's kind of like we would need to move 8 straight down, 4 candles in a row to hit there. I just feel like in 2 we're going to really start drying up as people are getting positioned for FOMC. So just be careful of this one. But again, I'd be very cautious of any type of short right now because it is hit number 3 and we're at basing right there. So I would say break, but I would look for a spike up, roll over, shot back to the downside. And again, you could play this in Nadex. I don't even know, what is it, 109.67? Let me pull Nadex real quick. What do we got here? Let's try. I don't even know what the knockouts are on this one. I don't look at knockouts too much on this one. There's a 105.51, which is sitting right here, which we get stopped out on the way. Then there's a 110, which is up here. It's a bit far, so it's not really any knockouts that are great for it. Let's see, call spread wise. Problem with the call spreads is they expire an hour after, so it's kind of like you can't really play a counter to that one. 109.68.26. The weeklies are a bit off as well. No, there's no call spreads for it. It's gonna have to be a binary flip. Yeah, we basically only hit binary flips on this one, so just nothing is really lining up great. I was really hoping I don't know. I mean, there's a 110.01 right there. There's one sitting right there. So, I mean, I guess if we go up and we kind of, how far is that? It's about 84 pips. So, again, if it is a big blockbuster and we do start to like really kind of just, again, this is a support resistance trap as well. So, I mean, if we do get a push in and we get kind of a failure to go higher, if we get close enough, there could be something there. I mean, so maybe a knockout sitting up there. Let's see, where does it go down to? 107.50. Let's put it here. Let's see. Let's change the parameters. What did I say? 107. Man, look at that. I missed it by 3 pips. That's pretty good. 107.51. Let's put this to 1. So that was so close. I was so close. Oh crap! And I just moved it back. Whatever, you guys get the point. But there's what the knockout bracket looks like. So again, we are definitely getting in the upper section of that knockout bracket. That risk is in there. Again, it gives us about $15 on the top. So yeah, if we get a little bit of a peek through here, we could get a potential reversal. And again, we got 3 days to go, right? It's just Wednesday. So we got some move for that one to kind of push back down, but be cautious. I mean, you can see that, this one is not, since this week has started, is not gone, top or bottom, because again, they're just too far away. All right. Let's switch it over and go to Indice Land. Let's see, go over here. Let's start with, I guess we could start with ES. Go back. All right. So, all right, so we talked about our double top being a fake out and pulling up, and it didn't make it all the way back down again. For those people that were trading it, again, it needed to come all the way down here. It didn't make it. It got about halfway. They fell great, and it came all the way back up, and we're like, wait, is this going to be a triple top? And then it was like, nope, we're just going to go higher. So let's remove all these just to keep our charts clean. I will say that this would have been a decent little profit right here as price popped through. Let's go down to a 15-minute, and it's kind of an ugly release this morning. I don't know. I mean, this is what a junk open. Trying to think, where would I pull things from here? It's not a bad little pop right there. The problem with this is I'm on a 15-minute chart. This level here is going to have a very difficult time with FOMC, but it is a level to kind of keep on your radar. Maybe if FOMC doesn't completely nuke this pair, if we get a push back up to 39.52, there could be a potential kind of roll there. Depending on how far this drops, if we can get an FOMC burst up, it may provide an opportunity to come back down. I do feel, though, let's see, what do we got lower? Yeah, that turned a little bit early. Trying to see where this one goes. I mean, right now, I don't see. It's not even really the best top. This candle is such junk. Trying to think where they could potentially stop at. So I would use this one as a profit target. So right now, I would say that again, we're right there by 75 off. Can I just? Oh, there we go. I would say right now, I would have a downside target of 3,900 inside of shorts. I don't know, knockouts. Do we have anything that's even remotely close? I don't even know. These are unfortunately, knockouts are not the best thing here. Right now, 37. There's a 42. No, there's $50 risk on that one. Let's see. Call spread wise. What did I say we're at? Indicative of 37. No, not interested in that one. Yeah, that would have been a nice one. I would have liked that one. So there's a 39.40 to 39.10 call spread. That one would have been nice to grab a little bit earlier. That one is well within, that one ends right here. That would have been a nice one. Yeah. Whew. Yeah, that would have been nice for the 8. There's an 8 in the 8 to 415. That would have been a nice little one. The 39.10 to 39.40. But right now, unfortunately, there's not a whole lot else sitting in there. I guess there's the 25 to 85. And there's about $60 worth of risk in that. Man, they got a lot of premium jacked into that one. Wow, that one is 10 points out of the money, and it's already got $61 worth of risk in it. So they're expecting a big move. So yeah, so the way to play these today are going to definitely be binaries. Let me see how much they have jacked in the binaries. There's a 39.09. So there's one sitting right, a 39.09 sitting right here, right? That's about $17 worth of risk to the downside. I think ES, if they mention anything about raising interest rates, I think ES is going to have a bit of a problem, and I think that one comes down. Again, I'm on 30 minutes, so let me do a horizontal line. Or sorry, vertical line. What time? Let's see. This ends at 4:15. So let's see. Whoops. Wait, where? I'm over here. Right there. So let's see if we can. Actually, I guess I can make that. Oh wait, you know what? I should just double click on it. Oh no, it's not going to let me do it. I don't know what 314 is. Go to 15. Let's go here. Right there. So we'll see if we can get price here. What did I say it was? 09. Yeah. Right there. That would be an FOMC spike. And it's about $18 worth of risk. But I would say I think bearish today. I just feel like the way that this one is lining up, everybody's preparing for the worst. And again, FOMC happens right. There's where it starts. Okay, so we'll see what happens with that one. But I think that one's a decent short. Looking at NQ, NQ was getting nuked. This one had a bit of downside run on it. Look at this. This is like, so yeah, you had to expect that. Same reason why this one worked here. Again, right there. So you knew that there was buyers sitting in that level, and that's exactly what you ran into, right? Was the buyer sitting right here. So kind of a funky place to go off of, right? I mean, this is a 15-minute candle, right? It opened here, went all the way down, came all the way back up, closed, and then went higher. So kind of a funky open. Is there an 18 up to for the breakout? For which one, Ernest? For what? For S&P? There's a 39.63 on that one. The 39.63 is all the way up here, though. Which one, Will? For this NQ this morning? Yeah, were you on a 5-minute? Did you do... Did you do something along those lines? I mean, really, it's a double, but should have been in there. No, that should have hit. You were on 15? I mean, look at it on a 15. So, I mean, you had to expect that, you know. I mean, probably you had to expect that buyers would step in somewhere around that area. And again, I guess you could, I guess, go down to this level. But I mean, really, that's kind of where the base is, right? It pulled up and then pulled back. I mean, you could have used this, but I mean, there's buyers in this whole area here. But I mean, I guess kind of there, right? Would be the pullback there if you wanted to grab something quick. And I mean, it hit. And like I said, that was deep in. But I mean, you know, if you're going to refine this, you got to go to the low. And again, you could have drawn it there because that's the base, and then the pull up here, and then pull back down. There's your confirmation on a 15-minute, and that you should have got entered. Yeah, I have to see the whole thing. But I mean, that's it. It should have been an entry. It should have been an entry, right? And again, let me see on a 5-minute. Yeah, I mean, that's, you can see where, I mean, I can further adjust it here, right? There's the bottom of the red. You know, that's really where the takeoff was, right? Here, pop, test, with this here. Right? So, I mean, that's, you definitely need it there, right? I mean, if you put it lower, I mean, if you put it here, it's kind of like, I guess you could, right? I guess, but again, I'm on a 5-minute, and I still think, yeah, even the 5-minute would have tagged. The zone tool, let me see, hold on NQ. NQ 15. On 15, I mean, there's a zone tool, right? Again, remember, the zone tool has some extra secret sauce where it's measuring sides. It doesn't do areas like this, but you would have to be looking at this saying, you know, right there, there's definitely buyers in there, right? I mean, if I was going to draw it here, I would say probably there, right? There to there. I mean, there's your base, right? It pulled away, came back and tested. I mean, I guess if you use that line, but I mean, that line's still tagged from the top, right? But most of the time, I would have drawn this one at least at a minimum here at the top of that green, because that's where the kind of the takeoff point was, and you're a clean touch. My computer is rebooting. Seems like there's a wick over wick. Yeah. On a 15-minute, there shouldn't be. I mean, this looks almost exactly like this, right? I mean, those two look almost the same, and that's, you know, again, both futures-based data. Where is it? I lost it. Yeah, right there. I mean, they look almost identical, so. Yeah, there's a wick over wick down here, but why would you? So I wonder if, are you talking about this wick over wick here? Right? Remember, wick over wicks are good for like intra movement pullbacks. This, you can see where the buyers are stepped in. So I mean, If you were using that, that must be what it is. You use the wick over wick. I wouldn't have used the wick over wick on that one. That's not the place to use it because the buyers are stepping in right above it, right? So you got to look for the big push there, right? Because on a 5-minute, I still wouldn't have, right? On the 5-minute, you were kind of coming down here. You were grabbing this on the 5-minute all the way down here, but you're missing out on this, and this, right? You can see that again with the, where is it? Go here. You can see all in this area right here. The buyers have been protecting it, right? Protecting. So down here, it's fine. Yeah, it's a level there, but it's not going to make it because all the buyers in here, right? They stepped in. So you got to go for the actual pullback, right? So, I mean, you could say that there would be you could say that there is one, right? But in reality, I would say that, again, we're starting to get on too small of a time frame here to be able to snag this one. I would say that, again, there's really your there's your zone, right? Use that green. This one is kind of a bit of indecision. Use that green there, and all this line in here is in there versus just this below, right? And then bam, there's your touch. So yeah, it looks like you went a little bit too far down, and we're trying to snag something on the wick over wick versus where the buyers actually were, which it happens. Okay. So yeah. All right. So where price currently is, again, the next test we have is really kind of coming in, really up in this level here is where we had kind of strong movement coming off of it. What I like about this level, and again, this may not hold. Again, it's a small 15-minute level in the NQ. If it wasn't FOMC, I do like it because, again, we had some basing. It was an area of interest. It pulled down and, again, gave us a really, really strong movement through. So that's great. But could FOMC bust us through the top? Yeah, it absolutely could. I like it because it's in the upper third. But I think bringing this one back a little bit further, I think right now we can take this one off. We chop through this now. Let's pull that. Let's pull this. We can pull this now. This one continues over. I'll just move it, but it continues over from here. And I would say that that's probably more of the target we're looking for today. Let's change this to yellow. Oop, not that. This to yellow. Right there. Okay. But right now, until FOMC, I would say that this is going to be a positive. And again, if we can get there ahead of time, could you take a short out of there, assuming that this goes down? And I would say that probably wouldn't necessarily be a bad thing. I don't know what we have. Let me see. Unfortunately, I feel like they're going to have these things so jacked up. Used to be so great to trade these on Nadex, and then they were like, oh, there's people trading these breakouts. How can we mess these up? Yeah, there's a 13.3. There's a 13.13.5, which is 13.13.5, which is right in here. So there is actually a call spread in there, which is not bad. And again, it could, it's all going to depend on how much premium they have jacked in there. I feel like Nadex for a while didn't look at the volatilities things, and then they went overboard. I feel like we're in the overboard phase right now. So it may be more of kind of a play for later. Just to take this one in a binary short, and we'll see. I don't know. It's like, yeah, I don't know. I feel like, hey, Will, I swear to God, I'm not trolling you on this one. I feel like I'm not trolling you, but at the same time, I feel like you're getting trolled on this with this chart. I mean, right now you are at a 1 to 9. Actually, almost 1 to 10, 1 to 9.7. Sometimes it feels like Nadex that. Yeah, I agree, Ernest. And that's kind of something that I've told Todd. I told him I'd love to have a discussion with the guy who's in charge. So I know they are working on it. So right now the strikes are manually entered. Like the widths and everything like that is manually entered. It's determined based off the volatility, so it's very slow. They're working on a system to automate it so it could adjust more real time type setting. But I told him right now that, listen, you have a binary and it's great that you have 21 strikes, but 18 of those strikes, 9 times out of 10 will never even be touched. And that one time they were touched, it doesn't matter if you had 21 or 10. They would have all blown through everything. right? Because there was such an extreme. They could have had 40, and it would, it's an extreme move. But you can't base it off the extreme move. You have to base it off what every single day is. And I told him, like, it's ridiculous. Like, why brag that you have 21 strikes when you don't touch 18 of them every single day? Like, it's a waste. No one's going to trade them. It's just a waste of space. Make them more competitive. More people will trade them when they're closer because there'll be more hope, right? Yeah, well, I think it just went over 1 to 10. Yeah, it's over 1 to 10 now, Will. So yeah, I mean, I'm frank with them. I'm definitely frank with them. I'm like, listen, you guys are missing out on a big opportunity because make it so that these are viable. Like, when the top 8 strikes are all worth $5 because they're so far out of the money that they're not expected to hit. Like, why even have them there? It's just a waste of space and time. Speed the platform up. Everything should have somewhat of a chance, but these are so far out of there. Like, it's like I can take a long shot. Well, great. If I can take a long shot that's 6 strikes higher, why would I take the long shot? Because I don't get paid any more for a long shot that's 10 strikes higher, right? Why would you do the 10 for the same price you can do the one that is 6? So it's just wasted strikes, right? Wasted strikes completely. So I'd be looking for rollovers, guys, at 13, 114. Again, I don't think FOMC is going to be great for NQ today. I feel like it's going to be down. I think the only one that stands a chance of really getting much, much higher from this one. And again, there was already a spike up. Kind of an interesting spike on this one. Will, this is probably the other one that dinged you. Was probably that, I'm assuming, by the way this one looks. And again, that's the opening candle. Was this your second one, Will? I'm almost positive. And again, it went right down to where it should have gone. Was this your second one, Will? I feel like this was your second one. And man, talk about going all the way to the opposing zone. Yeah, that was also a 6 to 1. Will, was this your second one? I feel like this was Will's second one. Actually, I'm almost positive, based off the way the candles look. Knitting stinks. We use Will's throwing keyboards. Yeah, this is Will's throwing keyboards. That's why I wasn't typing. Yeah, I mean, sorry, Will. Well, and this is a hard one. And like I said, this is difficult because you did have the basing right below it. You could make a case and say, well, wait a second. We had nice movement here as well, right to there. And you can say it is truly a wick over wick, right? So again, this is those aggressive ones, right? It's like, we typically will take the farther one. That's going to happen sometimes. That's why, that's why it's trading and not shopping. So again, your analysis was right. It's just there was a zone prior where it came down here and based. And then basically what caused this movement here is what got you, right? And again, on a 5-minute, I'm sure we can kind of see that a little bit easier. Yeah, see it here? Here's the base, right? Came down, pulled back, and then took off. That's the one that got you. And that's going to happen. I mean, it's just, it's at the open, so things are a little bit funky. So that's why, sometimes you got to make the call. If you're taking in futures, it's one thing, but you got to kind of look at it and be like, do we take it? And let me see here. It got to what? 32,840. Let me see. Hold on, I'm looking. Yeah, I mean, there was a 32,900, which is way up here, which wouldn't have worked. A 750 all the way down here, so none of those would have worked. There's a 30. What was it? A 32. Yeah, and then there's a 32,810 because one of them got stopped out to the downside. So, yeah, unfortunately, there wasn't a whole lot of stuff lining up on that one. Sometimes you can grab a call spread or something like that that's sitting right there. Where you got to be like, you know what? I'm pretty close. This could get front run. Yes, we have strikes. Come here and trade, Whispers. They will never be yeah, I know. Exactly, Wealth Butter. No, he's being political. Wealth Butter's like, "Rrr." So yeah, I would say, again, I think I think the Dow has some ability to go higher today. This area, there's a ton of buyers sitting down here. I mean, again, it drove deep into there, kind of busted them all out, and then started to reestablish and put them in. So it's got a lot of chunk through. Again, there's a zone down here. We can remove it because it's gone through. We can extend this one across, right? And again, the reason we'd extend this across is because we did have a bit of a touch there. I'd basically say if we break through here, if we break through 32,668, look for a profit target down here at 35. In actuality, I would say that look for one. It'd probably be smart to take profit here as kind of profit target one. Kind of have that be one, and then that would be two to the downside. And I think we have plenty of room for those two. Let's see. And again, I'd want to see what the base looks like in here, but yeah, we got plenty of room. That's 4. That's 2. But again, we got to refine this down a little bit. So yeah, I'd be looking for those two. All right, let's go to oil. So oil, as you guys can see, I mentioned in that prior discussion with Todd that 64.57 was an area. As you can see, at 10 o'clock, we hit it, reversed, and came back down again, all the way back down to, that was a $57 or 57-cent drop from the open. Let's see. We should have the oil number. Let's see. What is the oil number for today? It came in at 2.4. So, a little bit less, but not nearly as negative as what we originally posted. So, I mean, considering all things, that's actually not bad. I mean, I would say that it's probably close. And again, it's a slight move, but it's a lot different than what we've had recently. So people are going to look at that, and that's probably slowing it down a little bit. The big question is going to be what happens now with FOMC and return to growth. If they say growth sucks, then this will probably come down. So I would still say, again, there was the short from earlier. We got it already from the 10-15 spike down. News move is obviously gone at this point, and you can see it's continuing to drive lower. Let's see. Are we at our 3-to-1 yet? Yep. There's our 3-to-1. So, you guys should be out. That should have been a decent one. Pretty easy to grab. Bouncing off a 30-minute, actually, I guess it's a 30-minute level. At 10-15, there was your entry. Right? There was your entry. I would look for bounces off of 63.40, 63. I still think this is a decent level. Profit targets to the downside, though. Make sure you guys are taking your profit. And again, you may get a little hiccup there. Watch out for that one. But I think 63.55 is where we should expect this one to come down to. But again, anybody that caught this morning's session, hopefully you guys grabbed that one because we marked it off and talked about it. But it's already too late now to get in. As far as gold goes, you can see that gold had a little bit of a pop. We're pushing right back up into that 1735. Question is, what do we do now, right? So the open pushed us higher in preparation for FOMC. If we start basing and kind of getting stuck up into the same level, big question is, do we have another chance to kind of push back to the downside? I would say probably, although a lot of people really want gold to go higher. Again, talking about, things that will tank the market would obviously be mentioning raising interest rates, but it's something that we need to see inflation yet. Seeing retail sales go down farther than expected. It's expected to be lower, but farther than expected didn't necessarily help that. Again, remember, retail sales will definitely, without a doubt, be bigger next time. It's just because of everybody not everybody, but a lot of stimulus checks going out to people. Again, look at that. Gold came all the way down, and we just missed it by a little bit. But, I would still say kind of the same thinking for this one. Right. I just don't feel like we're going to get a huge inflation story today. It's about finding the right target. The way that I play this one is I think that go in here at like 1:30, go in a half hour before news, look to see if we have any kind of sideways movement, where we're at. Like I said, with it rallying high, I'm wondering if that's going to kind of give us this roll back to the downside. Like, we're not going to extend interest rates. The economy is not fully recovered. The stimulus should be good. And look for it to kind of run back down again. But I think 1722 is definitely an area we got to watch out for. This got front run at 1723. So yeah, I'm kind of wondering if we get something here where this is what our FOMC drop looks like. Right. And again, it would be like here. This 30-minute. Yeah, it'd be like here. I'm curious to see if we get something like that. right? Now, if they say, by the slight chance, they say they're starting to see inflation creep up and they will be very aggressive to control inflation, that is kind of a big oomph for gold. Again, I don't see the inflationary numbers. I can't see behind the scenes, but I know the retail sales number was not good for that. And even with, the CAD CPI coming in lower than expected, if we get bursts up, I would say that, man, let me see. I think the next level that we, really worry about is the same level where we saw sellers step in would be right there, would be 1750. And again, last time we saw that, last time we got up to that level, we pointed it out. We had a huge drop to the downside. So, I would say look at that level. And then again, I think right here would be the next major area where we're looking to take shorts at 1759. So again, if we get a, $30 rise up, look for a basing at this level, and then look for a roll. Look for a parabolic retracement move to the downside. You keep an eye on long-term levels. Yeah, right. I do, but only for intraday trading levels. Really. So what I'll do is, I'll look at daily and really 4-hour levels are my favorite. So I'll keep an eye on those. But for more intraday trade levels, because if I just look at daily levels, there's not much that changes day to day. It's not one that I look at. I do a weekly newsletter. So that is the one that I look at more of the larger time frame things on. And you'll see me every so often, I'll crank it up to a 4-hour and look at major levels. But for the most part, look at this. This is, on 4 hours, we spent 2 days in the same area. I'm not really trading long-term, situations here, right? Because it's a daily broadcast, we try to do things on the shorter time frame, if that makes sense. But if you have something longer term you want me to look at, I'm more than welcome. You're more than welcome to ask about it, and I can bring it up. I don't mind doing that. We're 10 minutes past today, what I normally do, but I'm totally fine staying on. Last but not least, silver. So silver, you guys can see, is chopping. Every time it bops into this green area, again, we keep popping higher. We knew we had buyers in there. I would say the same thing. Keep our eye on the 2636. We have not been able to get back up to it. We have found buyers in this lower level, so not necessarily. It's this level right here. It is this level right here that we're having issues with. Right here, around 2575. Let's see, is there anything in this one I like? Look at this. Look at the wicks in this one. This one is also just an ugly chart right now. Trying to see if there's any longs I would like in this one. I feel like no. Silver is just so sideways. I don't know if I'd use that one. This I wouldn't do. There's too much in there. Let me see on the 30. Is there too much? Yeah. No, it's just a test off of that. It's a very, very tiny level that went off of. Yeah, I don't really have a great. I guess I could use this for longs. This would be the best long opportunity right now. I think it's there. Right? But it's quite a bit of ways. We're talking about coming all the way down to the $25 mark. And again, FOMC could do that, sure, but I think we'll have some issues in this level right now. So, like I said, I'd like to figure out a way to get long silver. I think there'd be something decent in here to do it. But unfortunately, the bottom of this is just so choppy. It's such crazy wicks, and then when we do get a candle down, it's just literally a quick spike down and a quick spike up again. So, I don't know. If you're looking for something aggressive before FOMC, I'd say probably that level right there, right? Coming in at 2675, right? But like I said, is it the greatest level? Not really. 1, 2. This will be hit number 3. Here's a front run off that same level. If I took it up to the body here, you can see it is another touch. So it's not even the great. I like it because it is in the third, but I don't know. I think the level down here is much better. I think this is a much better area down here. The $25 mark. It's going to be a big psychological level too. When we get down to 25. Who knows? There's a little hiccup right here as well. That we could go off of. But right now, I think 26.36 for silver and 25.00 are the two that I'd be looking for. Okay. All right. So with that said, we're like 15 minutes past. Let's go ahead and do Yeah, it's continuing. It's pushing. Let's go ahead and do the contest. Let me drag the contest down. And really, if you had something longer term that you're interested in looking at, let me know. I can definitely pull it back up, and we can look at it. I'm not sure if you're still here really or not. I'll give you guys one more minute. We'll wait till this gets to 7:30, and then I'll go ahead and call it. I think it's funny how I pop it up and then go to a different browser. The time doesn't keep ticking along. It's funny. I guess Really's not here anymore. 30 seconds more. 25 seconds. Who do we got in here? Will is going for a big win. 15, 14, 13. Will. I know. Will's like, I'm winning this one. Wealth Builder's like, ha ha. If Wealth Builder wins, I'm just going to log out. All right, so let's see who's going to take today's 50 pip chips. Had another meeting start at 10:30. All right, here we go. Pip chip winner is today. Whoo, Silent. You know, Silent's one of those guys. Silence, and again, he lives with his name. He kind of comes in here, he sneaks in, and bam, he takes it with one ticket. A 6% chance of winning, and Silent goes. Silent, you're kind of creeping up here, man. Let's see. Right here, Silent gets his 50 pip chips for the day. And again, it's not about how often you win; it's about when you win. So next win on a Wednesday, Silent is up into that 500 range. So he's doing quite well. Yeah, I mean, there's your oil, guys. Come on, get down. This is a target I've had for a while. I want this target to hit. Again, hopefully you guys got this one. This is the one thing I hate about chart schools, and I get asked this all the question. It's like, you're broadcasting then. It's like, yeah, I can't, for a while I was like, I should just trade during chart school, but unfortunately it's like, I don't know. It's just too distracting. I've tried to do it in the past. Like, I'll do it on a separate window, and I can't do it. It's just too distracting. I can't talk, trade, and look at levels at the same time. So we need to investigate him. He does. He actually, Silent is pretty consistent. Like, when Silent doesn't show up every day, but when he does, he kind of pops in and wins. It's pretty funny, right? And he's actually getting, like I said, Silent is within 50 pip chips of doing mentoring, right? He can get mentoring sessions in at 500. So he's right there. So, all right, guys, with that said, I'm out of here. The girl's been quietly waiting in bed, drinking her yummy juice. But I need to make sure that I go feed her. And I will see you guys tomorrow morning. Remember, there is no chart school tomorrow. But maybe it's supposed to rain. Let me check the weather again. The last I checked, overnight is 30%, 10-day. Thursday, it's still saying 99% chance of rain. So if I don't have any... It appears that I will not have lacrosse practice tomorrow night for the boys. If so, what I'll probably do is I'll probably jump on and do like an impromptu session. Maybe after the Nadex contracts print at like 6. I know I have a meeting at 8:30 for a commissioners meeting. But maybe what I'll do is I'll jump on tomorrow night just to kind of make it up. And we'll see what kind of levels we have for overnight trading tomorrow with the new prints of Nadex. All right. Can I look at cryptos if it's on TradingView? I can, sure. Was there a crypto in particular that you wanted me to look at? You got a new one? Oh God, what did you get? What crypto did you get? Vet? I don't know. Can TradingView even find it? Is it this one? Vet Bitcoin or Vet Dollar? Which one? I'm assuming Vet USD. Oof, lots of gaps. So it's not quite there yet with is Vet the new one that they tried to come out with? Like to make like Dogecoin like a real coin? Right? Is that a real one? This is the one that they're trying to gain some traction with, right? I know that they were trying to come out with a Dogecoin version that was like real. Right now there's a lot of chop in this one. Let me see, hold on. Yeah, I mean, obviously we're in an uptrend, right? But it's still very, very gappy right now, which is going to make this one harder to do. Because like I said, we closed here, opened here, came back down again. Gap down. It's still at the gap every little bit. The top is not really a great top in there. Really, the bottom's not great either. If this can, pound off another 4 hours, for 1 or 2 4-hour candles, there could be something small here. Like I said, right now, Wealth Builder, and looking at this, the best thing you have to work with is kind of, and I don't even know if it's in here. Not really. There's a fib channel, but I'm not really going to use a fib channel. But probably, I mean, right now, I would say that your best bet is is this, right? Following that channel higher. Yeah, I would say, I mean, $1 is going to be kind of a peak up here. I mean, it got to 83 cents. I wouldn't say that they're necessarily protecting. It's kind of just, it needs to gain enough ground on this one. So, Conjures ADA, yeah. Yeah, I would say, I mean, $1 is fine. Like I said, I mean, just based off of this 4-hour analysis, I mean, you can say that, hey, listen, we got a nice little pop here, right? We got another little level sitting right here, right? But again, most of these level pullbacks, and again, that's a tested level, so I think that's a decent area here around 65, right? The question is there enough volume in this one to be a technically based pair versus just a pump and dump type situation, right? I mean, again, decent pullback. This kind of had a pullback, but again, if this is a new high, look for a pullback in this one going further. Tesla, again, we have Tesla right here. You know, Team Tesla 500. We were back down to 1550 on a 4-hour. You know, right now Tesla. Man, it's an ugly chart. It's an ugly chart on the way down. I mean, it's a 30-minute. Let me see. Can I see that on the hourly? No, I cannot. I was looking at that level down there. Problem is where you see a lot of these spikes up. Hello, Jinjin. Where you see the spikes up, you have a little list like wick here, wick here. You have to go potty? Okay, go potty. Go potty. You don't have to tell me. Go ahead, go potty. She's like, Daddy, I have to go potty. It's like, go. These are daily levels, but I'd watch this level right here. I'd put this probably there. That's the next kind of clean level on the bottom. Right there. It's a little gap there, but it's going to be kind of a funky one. I was looking for another top for shorts, but it's kind of, this is a few tests. It's kind of a funky one to play. Probably there. Probably something like that would be a smaller time frame. I guess there's a little hiccup right there. This could be one, depending on the day. I mean, if we can pop up there today. So, yeah. So again, this one's a little bit rough. It's got a lot of ugly gaps. I mean, and again, I'm on a smaller time frame now. I mean, I'm on like a 30-minute, but I mean, there's an intraday level sitting here. There's an intraday level sitting right here. That's not horrible, right? You can see those two levels. It's not an extreme. The extreme level would be down here, but it's all, you know, it's in the blue. So kind of an ugly chart. I don't know. Not a big fan of that one. But it makes sense where we are. I mean, if we can pull up again, this could, you know, if we can get to FOMC here, this could roll back to the downside or vice versa. So it could be either one. But, you know, these tiny little 30-minute levels aren't clean enough really to, you know, uphold. As I said, they talk about, you know, really jacking interest rates, then they're really going to jack this one up. So there's not much you can do about it. So, all right, with that said, I'm out of here. I'm out of coffee. You guys know what that means. Priorities, right? That, and I got to go make sure the girl's not making a huge mess because, you know, again, potty training a 3-year-old is always fun. So I'll catch you guys tomorrow morning and maybe even tomorrow night. Like I said, it's 99% if the forecast is wrong for weather, then I'll be at the kids' practice. If not, I'll probably host something tomorrow night just to get something extra in for the week. All right. Catch you guys then. Take care. Have a good day.